dropped out.
I'm saying there should be some benefit for people who've joined in person. So I'm going to share one deal with them.
Wow.
That part should not be on call.
Done, done, done.
Showing up का कोई benefit होना चाहिए.
Yeah, especially 12 p.m. on a Sunday morning when you could be with family.
Yep.
Great. I think Apurv, we have a quorum. We have about 13 folks, and more folks can keep joining in. So, shall we begin?
Yes, we can begin.
Great. Thank you so much, everyone. For joining in. My name is Karan. I'm from the ISB class of 2014. I work at Meta. I lead content marketing for Meta in India, and I also run Accelerate as a passion project. To help support young founders as well as building this community of super angels. So that we can invest in some of India's good startups together. I've been an angel investor now for the last 3 years. I've done about 60 plus investments. And as part of the this program, we're doing these master classes with some of India's best investors to kind of learn from them on their journey, right? And today we are super glad to have Chamaria with us. Apurv heads startup and VC at Google in India. He's been one of India's earliest and best investors, 200 plus investments, 40 plus exits, multiple unicorns and unicorns in his portfolio. Right, he's also a best-selling author, and I personally know Apurv for the last 10 years. When I was in ISB in 2014, and he was doing a mentorship session, and since then he has been always supported me, whether it's in my investment journey, whether it's my startup journey, whether as an operator, right? So I think there's nobody better in the ecosystem, to demystify angel investing, building deal flow, understand how to do deal making, how to drive exits, than Apurv. So, Boop, thank you so much, for your time today. Super excited to host you.
Thank you, Karan, and you're doing a great job at Accelerate. And let's make it an interactive session. So, if some of you want to, please switch on your cameras. It'll make it more interactive. Feel free to stop me anytime. Ask questions, whether it's using the chat or just raise your hands, and go live with the question. Important for you guys to get value and ask a lot of questions, including, if there are real cases you want me to look at, more than welcome.
Amazing, amazing. So, Apurv, maybe like I can, take this chance to like start with the first question, right? And would maybe love to understand, like a little bit about your investment journey, right? Like how long have you been investing, right? Like what have been some of your 2, 3 best, case studies in terms of investments, right? And maybe like what inspired you to start angel investing? Like was it like intellectual simulation? Was it working closely with smart founders? Was it because it's a very exciting investment class?
Thank you, Karan. So I started investing in 2012-13. That time there were just a handful of us investors in India, and very few funds. Uh, the valuations were also very, very different. So you could get into a deal at 3-4 crore valuation, which is impossible right now. A very good deal. And typically the pre-seed rounds were 25 lakhs, 50 lakhs max. So different world, different era. And since then, of course, I've done uh, partnered with, I would say, more than 200 founders, learned a lot, uh, and done both cross-border and done India-focused deals, and been very fortunate to receive some great outcomes. So let me share three, and I've tried to pick up amongst all the exits. I've tried to pick up 3 diversified exits, because at early stage you really need to be sector agnostic without really sharply thinking about only 1 or 2 sectors. So, and these are not in any particular order, like the largest exit first, second. I've picked up 3 interesting ones, And um, my benchmark of a good exit is minimum 20x of your investment. So that's the almost like the MVP for me. So I've taken that as a baseline, and we'll talk about three exits. So I'd invested in Safe Security in 2017 at a $10 million valuation. The founder of Safe is Saket Modi, and Safe basically redefines cyber risk management and measurement using models.
Lucidius, right?
Sorry.
This is Lucidius, right? Lucidius
Yeah,
Tech.
Lucidius later changed the name to Safe. So I'm using the current name, absolutely. Um, Last year, mid last year, they raised 50 million in Series B, which was led by Sorensen Capital, Eight Road Ventures, Telstra, WTI. So I'd invested at a 10 million valuation. And since then, in the preceding couple of years, uh, they've raised more than 100 million. They're one of the top three in cyber risk assessment in the world. The last round last year was at 300 million. So 300x, 30x return. And I've already taken 5x off the table, uh, still remaining to be invested. I think by the time I exit, it'll be a 100x, 100 bagger for me. So another couple of years from now. So this was hardcore cybersecurity, SaaS. Um, Founder has since then become a great friend. Um, Saket is an amazing, amazing founder. So always a pleasure to work with him, learn from him. Uh, Second, let me tell you about Innovate. So again, another great founder, different type of a startup. It was a co-working chain. Um, so Innovate, I had invested at a 10 crore valuation in 2017. 2019 March, Oyo bought it for 220 crore, all cash, zero stock. So if we had taken stock, we would have got even more valuation. But our thesis was that, you know, WeWork is not doing well. It could get tough. So we took a 220 crore all cash exit. So in 2 years, a 22x exit. Um, Again, Ritesh is a great founder, became a great friend. We ended up doing a bunch of deals together. Third stage, I'd invested in 2020 at less than 20 crores valuation. Bloom recently came in at and invested 40 crore at a valuation of 300 crores in Jan 2023. So smaller, 15x return in 3 years, which is absolutely like baseline for me. And three examples, different asset class. So stage is like Netflix of India, consumer internet, again, trade founders. Yeah. So Varun's, what should be the starting point for a beginner in this space? So the starting point, Varun, is to start attending a lot of pitch days, listening to startup pitches, understanding the questions which other investors ask, looking at various models. Uh, so treat it as, I think the best thing about angel investing is it's lifelong university and you're not paying for it, you're getting paid to do it, considering you invest well. So attend pitch sessions. Once you start seeing 10, 15 pitches, you will start getting a sense of what's a high quality pitch, what's a medium quality, and what's a low quality pitch. You will start understanding what are the questions to ask. Um, and that's the starting of a good journey. Now, none of us can be in many networks and do many things. So it's important to select a high quality angel network like Accelerate to be a part of, where the deal flow is already highly curated. So they've already gone through hundreds of startup pitches and then they end up showcasing the top few ones. So that's a good place to start.
Got it. And Apu, if I may add on to Varun's question, right? So there's this saying that you kind of miss 99% of the pitches that you don't see, right? So essentially, and like you've been like an established author, and I learned one thing from you as well, that you offer so much value to startup founders that they can't ignore you, right? So like according to you, like what are some ways? Like one is obviously joining angel communities, but apart from that, how does an investor build their personal brand so that they get access to the best deal flow?
Sure. So I think very important is all of us have some value to offer. So the first step I would say is introspect and think about what is the value you offer. Uh, for example, Ishan, who's on the call here with a very nice bookshelf behind him, is one of the most well-read journalists, operators. So maybe the value he offers is narrative shaping. And a well-shaped narrative can very, very significantly impact the valuation at which you raise. So Ishan, as an angel investor, might say, "Hey, uh, I'm a black belt in narrative shaping, and I can help you reshape and recraft your pick deck. So it's not only money I offer, but I can fundamentally help you." And it's a very important question you ask, Karan, because I fundamentally believe that, uh, and I'm going to say something provocative: money is a commodity now. Uh, it is ridiculously easy for good founders to raise money. They have more money chasing them than the amount of money they need. So typically, good founders, almost like water, flow into the best angel investors. And best angel investors are those who can sharply articulate what is the value they bring, and along with money, offer that as a strategic value add. So, to answer your question, think about what is the value you add. At times, what also helps is, if you are investing with a group, so you might not have discovered your value, or you might be early on in the journey. But if you're a part of a powerful angel group, and the angel group is being able to source the deal, that's the other source of value that you get in as a part of a cohort, a consortium. The consortium has some people who add value, and because of that, you are able to get into the deal. Now, how do you create value? So one example was, I mentioned there must be something which you have done in your past life. Either you've led sales or finance or HR or narrative building, or you've been a founder or investor. So that's one part of how do you add value. Second part of sourcing great deals is be a part of networks, go for events like the events done by TIE and many other accelerators. Um, when you go to an event, don't wait for people to approach you. I've often seen people trying to get into the startup ecosystem. They go at an event, they are standing in a corner, uh, and they sit for some sessions, usually on the last two rows, and then they leave. Uh, and they do it a couple of times and they exit because for them, they didn't see value or they couldn't find value. So when you are at an event, be very purposeful, go around, meet people, and almost take a mini target that I will look around and I will see who are the 10 people who look most interesting, and I will meet them, I will introduce myself and come back. Um, if every week you're attending 1-2 event and you end up attending 100 events a year or 50 events a year, uh, and you meet 10 interesting people, you will know 500 interesting people. That's how networks start building. And people will know you, they will reach out to you. Um, Third, uh, offer value. So when people reach out, at times there is no transaction happening, but build the network. So always offer value, be in touch with people. Uh, Whenever somebody wants 15-20 minutes, offer that help to them. Uh, a lot of gives will eventually get you one. So you have to be in the business of giving. And that's a very, very core part of the startup ecosystem. Fourth, be humble. Even when you're giving feedback to a founder, uh, don't position it as this is the absolute gospel truth. Uh, in business, there are no truths. Uh, you can challenge all business models, get it wrong, and if you end up doing a big round, succeeding eventually, everything is forgotten. So uh, always offer advice to help. Uh, don't ask to question, ask to learn. So founders, anyways, have very, very tough journeys, very hard lives. So ask to learn, don't ask to question. So, yeah.
Amazing. Kashir, I think you had a question.
Hi, hi, hi. Hi, Abud. This is
I
Kashish.
hope you are at a safe place and
No, no, I've got a driver with me, so that's
Got
okay.
you.
Yes. No, I just wanted to understand from the angel investing perspective, where do you see, I mean, 24, 25, which industry, which segment? Because you, of course, have got much bigger exposure to what's happening. And like you said, initial days, you should be open to diversifying. So 24,
Yeah,
25, anything
so
you feel that the segments would be expected to do better?
so I think I'm more of a Warren Buffett style of investor. So I don't follow fads or season or rain or winter or summer. Um I follow basic human philosophies. Uh, लोगों को need क्या है? Every business product solution idea exists to serve a need, right? For example, Shubham is a very famous analytics leader. So when he works with companies, the basic need is companies are looking at insights. डेटा बहुत है बट उसका करना क्या है लोगों को नहीं पता. So Shubham is a master at pulling out gems of data insight, and he's like a compass. He's like Google Maps for business, right? So ये जो होता है, human truths and business truths don't change. So I believe as India becomes more affluent, लोगों को financial services चाहिए होगी. And if you think of it like a fishbone diagram, when people have more money, either they will save or they will invest. So any business which is into a business which allows people to save well, invest well, spend well, is a it's not a cyclical business. खराब टाइम में भी लोग स्पेंड करेंगे, इतना बड़ा इकोनॉमी है, अच्छे टाइम में भी करेंगे. आई थिंक हेल्थ केयर बोथ प्रिवेंटिव एंड क्यूरेटिव. या तो लोग ठीक रहेंगे उसके लिए खर्च करेंगे, या बीमार होंगे उसके लिए खर्च करेंगे. Fishbone diagram, I think both businesses, curative, preventive, will be large. Third, I think overall people are becoming more affluent. More and more people are getting lifted out of poverty. India's per capita income will go from $2,300-$2,400 to about $5,000 in the next 3-4 years. As Indians become rich or more affluent, their desire for higher quality, masstige and luxury products will go up. Today, even drivers wear smartwatches, and so I strongly believe in premiumization as a trend and investing behind that. Third, I think most people get it wrong, but when people become richer, they don't become they become busier. They don't become less busy when they become rich. So anything which does things for people, like Urban Clap, you can order things at home. Anything which is a delta 4, as Kunal Shah calls it, which is creating 4 times at least incremental value over an existing solution, and saving people time is a huge theme. I think we have very large borders. So we have seas on both sides. We have 2 amazing neighbors, Pakistan on one side, China on one side. इतना बड़ा border area है. I think defense as a sector never going to go out of fashion. As India becomes more self-assured, any startup which is working in defense tech, drone, submersibles, unmanned aircrafts is going to be very hot. I think space and cyber are going to be the 4th command. So you have Navy, Air Force, Army, and now you have a Unified Services Command, which is, so whether you call it the 4th command or 5th command, I think cyber and space is going to be the 5th command. So cyber security, especially B2B enterprise, and I always tell companies that 50% of companies are hacked. The other 50% are also hacked. They just don't know it yet. So I think cyber continues to be a very strong theme. I think there are 1.3 billion people in India. And a core thing which creator economy, creator commerce has done is people want to feel special, look special. Nobody wants to be one of the thousands of people. So anything, any kind of garment, clothing, jewelry, food, which gives you the status symbol. and makes you look different, whether it's a wearable, a watch, a jewelry, in an affordable manner is going to be very big. So we think, boat ban gaya, noise ban gaya, तीसरा नहीं बनेगा. I think 30 और बनेंगे अभी. So
Yes, I agree.
now I've given you a macro theme, and the way you should think about startup investments is, I think a lot of investors ask, TAM कितना बड़ा है, SAM कितना बड़ा है. In an India kind of a market, whether you sell pan or you're in financial services, सबका TAM बड़ा है. So that's the slide where you should spend the least time. Markets are huge, opportunity is huge. Early stage may spend most time understanding the founder, the resilience, the grit. Have they burned the bridges or can they walk back? Those things are far more important than TAM, SAM, and a perfect solution.
Apur, what about generative AI as a theme?
Very, very good question. I think generative AI is a foundational theme. What a foundational theme means is it is going to change everything we are experiencing. And the way I think about generative AI is there are three layers. There are companies which are building generative AI at a core, at a kernel level. So these are companies which are LLM companies. These are companies which are building chipsets, which are building GPUs, CPUs. There are hardly any such companies in India. बहुत कम है. So Krutrim hai, which Bhavish runs, Sarvam hai, but there are very few companies because the level of compute required, funding required, experience in AI required, all those are just coming up in India. Uske upar there are companies which are using LLM models of other companies to verticalize and offer solutions. So somebody is saying, hey, I will help you do personal tax. Somebody is saying, I will help you write a will or a legal document. Or, companies like InVideo. So InVideo till last year was doing $1 million ARR. Now it's doing 37, 38 million ARR. And it's a co-pilot for video generation. But at the back, possibly it uses Sora or one of those models, right? So second are companies which are saying your mess for less. I will use generative AI to offer your mess for less. आपको मैक्रोज नहीं आते, फॉर्मूलाज नहीं आते, एनालिटिक्स नहीं आता, कोई बात नहीं. आप एक स्प्रेडशीट लो, XML लो, dump it, and just ask questions in English or Hindi or any of the vernacular languages. I will draw insights. So I think this is the layer of companies which will vaporize a lot of. पहले मॉडल होता था योर मेस फॉर लेस. यूएस में $95 an hour, इंडिया में आप $20 में करेंगे, and that was the arbitrage. So the second layer of companies are saying, whether it's advertising agencies or chartered accountants or law firms or analytics professionals or people who do research or write copy, or even do proofreading. So pehle journalists would get paid or freelance writers would get paid something like 5 rupees a word. As generative AI becomes mainstream, a lot of these workloads and human-centric efforts will start becoming commoditized and will move to Gen AI. I already, see pitches where companies are saying, I can help you write screenplays. So they've looked at all the successful screenplays in the world. They've figured out which are the 8 themes around which all stories are written. And then uske hisab se flows, characters, endings, music. People have started using Gen AI to write novels, right? So वो काफी कुछ होने लगा है. And then the last wave of companies are companies which are saying, I will use it to offer efficiency to large outcomes. So, contact center, AI, robotic calling. So today, if any of you get a call, whether it is outbound or you call a Maruti center, all of that calling outbound and inbound is done by Rezo, which is a Noida-based Gen AI company. So that's the third layer. Now let's pick up some questions from here. Okay, how do you manage returns from investments that do not become multi-baggers and hence do not provide exits? Do you guide the business to become a dividend play? Any case studies? Yep, very good question, Bhavesh. So firstly, angel investing as an asset class or startup as an asset class, by nature is not a liquid play. So you have to both be very organized in your thinking. And the number one skill required here is picking. The number one skill here is not anything else. It is not value adding to the company. If you pick well, the outcome will be great. It's like IPL teams are picked, right? आप कितने भी अच्छे coach हो, raw material is not good. It's very hard to generate multi-baggers. So I think the number one skill required here is picking. And at times it happens that you've picked well, but so I still have companies from my portfolio in 2013-14. Out of the 200 plus investments I've done, there are 3 which have gone bust. One was acquired. We didn't get anything. The company which acquired it still exists, and 2 shut down. Hota hai, at times, you get it wrong. And thankfully, those were early on, and I learned from them. There are many others where I haven't had an exit. The reason could be, so I invested in an AR/VR company in 2015. पहले AR कर रहे थे, then they were doing VR, then they started doing XR, then they started doing Industry 4.0, then they started doing digital twin, then they started doing metaverse. So almost the same wine, but different labels. अब वो वाइन का टाइम ही नहीं आया अभी तक. बड़ी बड़ी कंपनीज ने इन्वेस्ट कर दिया, बट तो एट टाइम्स क्या होता है, देयर इज अ प्रॉब्लम विद बीइंग टू अर्ली. That was my learning. And yes, these companies will not pay dividend because these are not listed companies. So until unless your investment amount and the SHA which you have written calls for a dividend, these companies will not pay dividend. But many of them will continue growing at 10, 15, 20%. At times you will get a M&A after 15 years, 10 years. They might not be multi-baggers like 30x, 100x. But that said, if the business keeps growing, today they can do a SME IPO at NSE Emerge. They could get acquired. And you have to be patient. Once you have put in money, you need to have the right temperament. So I always say more than timing the market, the time in the market is more important. So it's very hard to time the market, but if you can spend time in the market, eventually it turns out to be okay. Okay, let me take the second question. Okay, Karan has answered the second one, which is on minimum amount required. I think totally depends on what is your corpus and investable surplus. I would say lowest, do at least 1 lakh. Below that, I think you'll typically get junk deals. And I would say 10 to 15% of your annual net income you can allocate to this asset class. And if you're doing that and you plan to do 5 to 10 deals, depending on your disposable income, you can even go as high as 5 lakhs per deal, 10 lakhs per deal. So individual question. Okay, Ankur, we are pivoting to a SaaS focusing on Americas. Yes, Ankur, I think if you're a SaaS company targeting the US market, Indian investors will be interested. Happy to look at your company. You can send me or Karan more details. Would definitely want to look at it. What would be the breakup of 200 plus investments in terms of IRR returns? So I don't think of it as IRR or DPI or MPV, but I can tell you 200 plus investments, about 45 exits, about 62% companies have gone for a up round. So I can tell you I'm many times over the amount I've invested, many significantly over. So I don't look at IRR and stuff like this. It is immaterial. I'm comfortably beating market returns by many times. So my passive investing is like Nifty 50 and stuff like that, and I'm beating that many times. So not very unduly concerned about what's the IRR. What are the most essential key metrics or elements you look for in a deal across the board? Very good question. So when we are looking at early stage deals, um, we are basically looking at number one is what's the quality of the founder. And I mentioned that earlier also. You want founders who are amazing, who are very gritty, uh, hopefully who come with a pedigree and track record of having built something earlier. So we invest in a lot of founders who've been CXOs, who build businesses, or who come from tier two, tier three towns with an incredible hunger. Uh, Hunger नहीं है तो कुछ नहीं बनेगा. So uh, everybody whom I know, people on the call, you can, how much I test for that, right? Uh, Even in work. So Shubham and me have worked in the same team. There's so many all-nighters we have pulled in, and we've had fun doing it. So I think passion और hunger बहुत important है कुछ बनाने के लिए. वो नहीं है तो आप founder मत बनो, कुछ और बन जाओ. But वो सबसे important है.
Maybe an angel investor.
Maybe be an angel investor. That's a good one, Karen. Second, I would say, tell me something I haven't heard before, or tell me something in a manner I haven't heard before. So storytelling, narrative shaping, differentiation, everything in India is so competitive. Even when we look at satellite or rocket companies, there are 15, 20 companies sending rockets to moon. पहले हम बोलते थे it's not rocket science. अब हम बोलते हैं कि rocket science is also not rocket science. उसमें भी 20 companies हैं. So इतने competitive market में, if the founder or the founders can't narrate a story, can't give you goosebumps, मतलब उस मीटिंग के बाद आग लग जानी चाहिए कि ओ माय गॉड व्हाट डिड आई जस्ट हियर. अगर वो नहीं होता है ना, देन एंड दैट डिपेंड्स ऑन एवरीथिंग. सो लो एनर्जी पीपल, कुछ लोग पिच करते हैं कैमरा ऑफ है, कुछ लोग बोलते हैं अरे वेयर आर यू बेस्ड, आई विल कम एंड सी यू इन पर्सन. तो एक एनर्जी का मैग्नीट्यूड होता है. लोएस्ट इज योर पिचिंग, वीडियो इज ऑफ, and you're not saying anything, you're on mute, there is very little interaction. It almost looks like you're reading a script. This highest is the person shows up, is before time, and in that 30 minutes, 45 minutes, 1 hour blows your mind, founder or set of founders, and you believe that, oh my god, it's going to be incredible learning about their business, working with them, supporting them. So energy transfer, narrative shaping, differentiation is very important. Third is what's the quality of talent they have. कोई भी अकेले नहीं बना सकता. So are you able to attract the first 10, 15 people who are incredible, with good pedigree, builders? I think these are some of the things we think about. I personally don't end up investing in a lot of deals which are pre-product, pre-revenue, but that's just my style of investing. And I think that's one of the reasons why the mortality is low. Most of my deals will have revenue, it will have PAT, and it will have a team. So I also don't personally like doing deals which have a high burn. So again, my investing style, and maybe that's why the mortality in my portfolio is very low.
Apurva, I think this is a very valid point. And in fact, like we can maybe do this exercise and I can share this framework, with everyone post the call as well. I remember when I started investing, you made me go through it. So, like there's this essential framework which says that, I want to invest in these type of companies. So you identify your sectors. I want to invest in this stage of companies, whether it's pre-revenue, pre-product, revenue, seed, pre-seed. They should have at least CM to profitability. So you identify your, like the key metrics that you're looking at. And then essentially, also mention like if there are any bonus points. For example, if it's a founder who's, let's say, a second-time founder, who's driven exits in the past. So I think like, maybe I can share this framework with folks post the call, and like all of us can kind of define our investment thesis as well.
Great. Yeah. Write down, I think, all of you will have certain areas which you find more interesting. It's also very important to enjoy the journey. Don't do it like a painful process. It's not like buying life insurance. Maza aana chahiye. that maza is very important because you will bring that positive energy to the founders, to the game, and it helps a lot. So definitely, Karan, please share the framework, and people can start defining their own. I would also say get over the inertia, which means एक छोटा बेंचमार्क ले लो, बोलो कि यार अगले 3 महीना में 2 डील्स करनी है, and it's not a huge amount. It's even if you're doing 1 lakh, 4 lakhs, 3 lakhs, but you have to get out. वो बोलते हैं ना कि all of us want to go to heaven, but none of us want to die. So heaven जाने के लिए तो मरना पड़ेगा, which means cut the check. Without cutting the check, you can't learn. जब चेक काटोगे ना तो you will start asking questions, you will get into detail, you will start reading about industry, founders, फाउंडर्स की लिंक्डइन पोस्ट पढ़ोगे, पुराना क्या लिख रहे हैं, किससे कनेक्टेड हैं, फेसबुक पे क्या कर रहे हैं, ट्विटर पे क्या कर रहे हैं. That will only happen when you're cutting a check. So I would say after the call, while it is still fresh in your mind, if you can start thinking about where do you see India is going, पैसे कहाँ बनेंगे, what are the sectors you are interested in, what is the value you add as an operator or an investor, and then write down how many deals do you want to do, what is the average ticket size you will do, and commit yourself to that. Matlab, you have to be in the game. It's like you can read about water, you can talk about water, you can see water, but till you pour water over yourself, हिले नहीं होगे.
Amazing, amazing. Apu, maybe we can talk a little bit about deal making, right? So, like, what is in your experience, what is an ideal valuation an angel investor should enter into? Like, what are some terms that people should review, like whether it's ROFR, preemptive rights, non-compete? Like, do you invest directly? Do you go through a syndicate? Do you have do you invest on the cap table? Right. So, like, maybe if you can just take us through a few of the technicalities of deal making, at least for an from an angel investor POV.
Sure. So I think this question will have different answer depending on the month and year you're asking. Early stage is very hot right now, and early stage maybe there are consumer deals, there are Gen AI deals. So don't take this as the gospel truth across all kinds of assets and domestic companies and international companies. But I think if you're being able to get into good early stage deals below 25-30 crore valuation, it's a very, very good sign. That's the first thing. Now, of course, if it's a Gen AI deal, it could be 5 million, 7 million, 10 million also in the first round, or a profitable SaaS company with international revenue. That said, personally for me, I would typically say I look at any company, and I would say I've been investing for a long time. So my criteria could be different from yours. I look at mostly companies below, I would say, $7.5 million. So 56-60 crore valuation. These are companies which have a product, which have revenue, which have PAT, which are growing very fast. So that's my framework. If you're investing 1 lakh, 4 lakh, 5 lakh, I I would find it very hard to believe that a good founder would want you directly on the cap table, because it's a lot of hard work for the founder. Imagine they're raising 1 crore and they get in 20 people who are putting in 5 lakhs. Every time they do a up round or they do a change, they will have to reach out to 20 people for signatures on all paperwork. Somebody might be unavailable, somebody might be traveling, somebody might be unresponsive for a variety of things. So अच्छे founders typically for such small amounts would not want you on the cap table directly. Typically, if it is a 1 crore round at a 10-20 crores valuation, to be on the cap table, the founder would want you to be at least putting 25-30 lakhs. 5 lakh mein typically, in fact, if somebody is getting you directly on the cap table for anything less than that amount, you should be, I would be concerned. That's a warning sign, because the founder possibly does not even have the maturity to understand कि वो क्या कर रहे हैं. or it could be a very desperate situation. Now, when you're actually not on the cap table and you're doing it through a fund, most syndicates and funds will have a standard. They will have a good law firm, and the law firm will ensure that your rights are protected. Uh, Whether it's a syndicate or a fund, all of them are regulated by SEBI. So angel funds fall under SEBI Cat 1. VC funds fall under SEBI Cat 2 license. A law firm would be helping them, and they will ensure that ROFR, preemptive rights, all these are cognized for, and you're protected. Uh, so the 2% one-time processing fee and the 20% transaction charge you pay, you basically end up paying for wide coverage. Think of it like an insurance policy on top of the deal. You don't, it's like you drive cars, right? But very few of you can open a car and reassemble it. So over time, you will start understanding what is ROFR, what are preemptive rights. But for now, you don't need to. But it's important that you take insurance, which is go through a syndicate or go through a fund. Yeah. Otherwise, if you're putting 2-3 lakhs or individually dal rahe ho, law firm hi 2-3 lakh le jayegi. So 100% of your cost of investment itself is going to be versus going through a syndicate or a. There's a question on the chat. Okay, missed out the third type of business. So the third time are companies, AI companies, which are looking at very large fundamental workloads, like, contact center AI, which are basically using Gen AI infrastructure to vaporize very, very large fundamental workloads. When investing in a fund, what's the return one can expect considering mutual funds give 10%, 20%? So I think, again, I would say there are various kinds of mutual funds, Varun, and there are various time frames. I've been an investor for as long as I can remember or even forget. There have been years when mutual funds have not given more than 3, 4, 5% returns. Markets have been flat. A rising tide lifts all boats. So in a bull market, every mutual fund is looking good and giving you great returns. And I would not say let this be your expectation from either a mutual fund or a venture fund or an angel syndicate. This is bull market. Bull market mein you just need to be in. You don't need to be astute. Whatever you pick is going up. So that said, I think if you're investing in angel, you should expect mortality. You should expect till you become proficient that maybe 25, 30, 40% of your investments will die, fail, or just become zombies, stagnant. Their revenue is growing, but kuch up round nahi ho raha hai. The companies which will give you an exit, you should definitely expect 25, 30%, 40% minimum returns. But patient rehna padega. This is not liquid, so you can't sell it like a mutual fund and expect capital to come back immediately.
Great, great. Guys, any other questions, please, feel free to ask.
A great question from Varun. So Varun, investment horizon, you should get in thinking it's 7 plus 2 plus 2. I've spoken about exits which I've gotten 2 years and 3 years. There are also companies where I'm still in and it's 7 years have passed. So go in with the worst case thinking and pray for the best case scenario to happen.
Amazing. Apurva, if I may ask, what are some things that, work for you to kind of, build your personal brand as an investor, right? Like, I mean, you can see a lot of people do a lot of podcasting these days, or, people like Sanjay Mehta have been like so active on LinkedIn for the last 10 years, right? Like posting so much, like that's how they get their deal flow, or Twitter, right? Like you've been an author, right? So like, how important it is to build a personal brand? What are some things that early angels can start doing, to build their brand and give out that value?
So again, I'll tell you something which might be very provocative. I will say before you build your brand, build your product. खुद ही को कर बुलंद इतना कि खुदा हर बार पूछे बता तेरी रजा क्या है. So you have to first strengthen the product, which means are you someone who's helpful? Are you someone who has expertise in one or a few subjects? Are you someone who's seen as humble and receptive? Uh, marketing communication, personal brand, all that comes much later. Uh, First step is define who you are sharply. Uh, really become good at what you do, whether it's your professional jobs or volunteering. Second, be out there. Um, we are not, as individuals, we are not consumer brands. We don't want to be, religious gurus or politicians or movie stars. So it is not important as an investor that 10 lakh, 20 lakh people know us. Up till now in India, about 20 to 23,000 companies have got funded across stages. Only 23,000. Which means even if you wanted 100% of the market to be covered, you only needed 23,000 founders to know you. Right? So don't make the mistake of thinking of yourself as a consumer brand and opining on everything. I've seen people commenting on everything from, inauguration of temples to civil rights to what is happening in election. And I generally think you do yourself more of a disservice by always being on media and commenting and doing everything. So be very sharp. For example, I see Karan, being very sharp, very effective, talking to entrepreneurs, early stage founders, and building his brand around a operator investor. So that is far more effective. Uh, my worry is not that everybody won't know me. Uh, I'm not concerned about everybody. There are 930 funds in India, about 10,000 angel investors, 17, 18,000 founders. So my TAM for everybody who should know me is possibly 40, 50,000 people. And I'm not in a hurry because at times what happens is if you're very visible and you're always visible, people end up thinking कि काम कब करता है. And ये इतने क्यों visible है? A lot of marketing also leads to fatigue. Also, if you're so busy, it is very hard for you to be an introspective investor. Like, where will you find time to read decks, to make notes, to read research reports? तो सबके लिए टाइम निकालना पड़ता है. So find balance, build product, then build marketing, and then build distribution. Don't build distribution, marketing, and product in that order.
Amazing. And I think one of my best sources for deal flow has always been ex-founders who have funded, right? So like, I mean, if you can really offer value to few founders and, they've like loved your support, they will kind of recommend their friends and, who are starting up. Like, I think that's been like one of the best sources for me in terms of deal flow.
Completely agree. And I know Karan keeps sending me some incredible deals. So Karan, your deal flow is very good. Yeah, Chetisi, how are you?
Hello, hi. Thank you so much for this session. I'm actually a founder, guys, and I was just here listening in to learn about angel investing. And Apurva has been a mentor for me for a while. My question to you, Apurva, is you said that there were good angel networks that one must select. So, how do you decide which angel network to go with? And as a founder as well, this is why I'm asking because we're talking to a few. So, what, according to you, is a good network, and how does one decide which one to invest with?
Sure. So just full disclosure, I'm not an investor in Chetisi's business. Chetisi was a part of our accelerator, and I've been a sounding board and hopefully some help to her as she's thought about term sheets, negotiated with investors. So I'll take your use case, Chetisi.
Yeah.
So there is a network which Chetisi was talking to or is talking to. I'll qualify everything so that you don't know which network it is. And the network is asking the founder to pay 6-7 lakhs for DD, where the due diligence should cost 1.5 lakhs. Then they are asking business facilitation fees. Then they are asking advisory shares. If on a 1 crore, 2 crore round, 3 crore, the network is taking out 8 to 14, 15% as fees, it would be very, very hard for them to good quality founders. And if they're unable to get good quality founders as investors, how would you get good quality deals and good quality exits? So everybody has to make money. The network has to make money. The founder has to make money. The angel investor has to make money. But the relationship can't be lopsided and value extractive. There has to be a genuine respect for the founder who's putting their life, aspirations, everything on hold to build a business. So good angels, good angel networks would do that. I would say, jitna milta hai, take 20% less than that and leave some money on the table. That's what good investors do. When I'm doing early stage deals, I typically don't negotiate like crazy with the founder, taking out everything and not leaving everything for them. So good networks, good funds, early stage mein, it is not about valuation. It's about the value you're placing on the founder. So don't nickel dime and take out that last 5%, 10%. That's my definition of a good network. Of course, the people have to be good. If there is bad news, they have to share bad news. Good news can take the stairs, bad news should take the escalator. So good investors and operators do that. Does that answer your question, Chetsi?
Yes, it does. Thank you so much.
By the way, Chetsi is building something incredible. She's building Brown Living, which is a e-commerce platform for eco-friendly products, and amazing founder, super gritty. So, Ishan,
I just want to, because I benefited from it, your ability as a sounding board. Now that at the angel stage, that is very critical of having somebody, it's almost being a very core part of the team. The problem is not really solved. So how does one sort of navigate that? Because you're also coming, especially angels do come in with a lot of experience, but how do you manage that relationship with the founder?
देखो, मेरे को लगता है ना, founder बनना is the toughest job in the world. So tremendous respect for people like Karan. Karan is a second-time founder. Ishan, you're building amazing Leader X. Chaitisi, all you guys. Shubham is a founder here. Some of you are also founders and investors. So incredible hard hai founder banna. It's not easy to build anything. So as angel investors, as advisors, first thing is be available. If somebody wants a 10-15 minute chat, take out that time. ऐसा कभी नहीं होगा कि suddenly आपका calendar free हो जाएगा और आप busy हो जाओगे. Like if Chetisi sends me a message, at times I'm so busy that she wants a call, but I'll tell her, yeah, just put it on WhatsApp, I'll reply. Or when I have 2 minutes, I'll send you a voice note with the answer. Or Ishan, you want to catch up, or Shubham, you have to be there. At times, just giving a patient listening is super important to the founder to make them feel they are not alone. Second, have the humility to know that you don't have answers to everything. So at times we tell the founders, yaar, mujhe bhi nahi pata, but let's together find somebody who can help you. Offer your network, offer your connections, be in the business of giving back. And then you can't, I don't think as investors, we should be in the business of telling founders what to do. I think we should be in the business of almost being like coaches who help the founder discover the answer. So I think coaching is a hard muscle to build, but it's a super important muscle. Don't be in the business of giving answers because you don't want the founder to be on crutches. You want them to be racing and galloping and flying.
Amazing. Thank you.
Great. Apurva, I think you had shared that you'll be sharing a deal with us. So if anyone doesn't have any more questions, we would love to, if you can share. I think somebody has put up a question on the chat.
Some startup as a proprietor LLP and then come for funding. Yeah. the best case scenario, the chief, sorry, I don't know your name, so I'm just going to call you the chief. The best case scenario, chief, is to Kaushal. Okay, good. Is to ask them to convert it to private limited. Absolutely. Proprietor LLP partnership firms are not best suited for investing. So do ask the founder to convert, change the company to. So we have last 5 minutes. So I'm, if you can, Karan, stop sharing, stop recording, then I'll share the deal, because this is only for people who showed up. This is not for people who